The company's made 600 grand. So what I'll do in 2025, if the client just wants to minimize their taxes completely, I'll make the client pay 25% in taxes. If they want to put themselves on some sort of wages, the great thing is that this will get reduced, but I get to access their lower tax bracket, this beautiful looking thing here. So if I put them on $45,000, they're getting taxed at close to 5 grand. The effective tax rate is like 11%. So you see how it's 5 grand, including Medicare levy. It's 11%. That's amazing. That's a lot lower than this.
Then be curious, why don't you put them into 18%, which is without tax?
In 2025, you could be zero taxed or you could be at 16 cents in a dollar. But if you do zero, what's going to happen is you're going to push this 510K, the leftover profits, into the next year. Assume I do that. Assume I go 18,000 here and then 18,000 here. What happens to the profit for next year? It's 564,000 as opposed to 537. What happens in 2026 is I got to split this money between these tax brackets and the 25% tax bracket in the company. I'm using 2 years to be able to minimize my taxes. Yes, I'm making you pay more in the first year, 16 cents in a dollar. But I prefer that over making you pay 25% next year, because this leftover profit, what's going to happen to this leftover profit in 2026? These two will go away. You're going to be left with, so 564. That's your retained profit. That there gets taxed first. So you're actually left with 423 as a retained profit. That's sitting in your bank account. Because you pay taxes, you already just assume that you paid the 141. Assume next year you make no profit whatsoever, okay? Just to make it easier to calculate. That 423, you want to take it out now. In 1st of July, after the financial year, you decide, I want to take that dividend out. So you take the full dividend out, 423. So 423 divided by 2, you're now at the 30% tax bracket. No, even more, you're at the 45, 47%. For the extra $10,000, $20,000 that you've left here, it's getting taxed the highest tax bracket. That's why you actually want to maximize the lowest tax bracket in 2025. Because if I did that, these taxes would be less. So instead of it being 423, it'll probably be like 380. And then you split 380 between the two people, and you're probably going to be at a lower tax bracket in the next financial year. So that's why I usually argue to clients that, hey, you got to pay yourself something. Put yourself on 45. The only downfall of putting yourself on 45 is the superannuation that you have to pay.